Hey folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Wednesday, November 4th, 2015. Alright folks, I'm going to show you and explain to you some keys here that are going to blow your mind. First of all, let's talk a little trendline analysis, then I'm going to tell you why I am going into Facebook earnings short. And I'm going to give you the exact reasoning, and I think you're going to be like, holy cow, that is pure genius to say the least. All right, we'll find out right on earnings whether or not I make money or lose money, but I'm using specific chart signals that I'm going to explain, and therefore I have a basis behind it as opposed to many people who just say, my gut tells me this or that. Guts don't matter in the market. Charts do. All right, first of all, markets are seeing a little bit of weakness today. We topped out yesterday with a little sell into the close, gapped up today, never took out the high. We've continued to see some selling today. Not major selling, not on super heavy volume, a little bit better volume than the previous couple days. One thing, you want to know why the market topped out where it did yesterday, go to your daily chart on the SPY. So you're on the intraday right now. Let's go to the daily chart. This is going to be awesome, guys, and I love trend lines, right? Take the all-time high on the spiders right here, all right? Connected to the previous pivots right there. Look at this. Pivot high to pivot high. You pierce that high right there. It goes right there. Isn't that amazing, folks? So again, high to high, right to high to high. And there's your pullback. Now, how deep of a pullback are we going to get? That's up for grabs, right? But ultimately, you should get some sort of pullback, extended market, ridiculously extended, actually, way more extended than I even thought the markets could get. And you are starting to get the pullback today down about 80 cents, although it's not a big move yet. I don't expect it to really get too big until we get to Friday jobs report, and then the Friday jobs report will be key. That'll be the one where you're like, holy cow, this is either a big move up or big move down. Based on the charts, you really would expect a pullback, but we'll see what they do. All right, let's go to Facebook, guys. That's what we're all here to look at, and I know you guys are all interested based on the title of this video, which features Facebook. So Facebook, again, has had a big run up. Okay, well, obviously, maybe it's a little extended, but that doesn't mean you short it. Just because a stock is up or down a lot doesn't mean you short it. You need to find reasons. The reasons are simple here, very simple. Okay, and this is why I have, remember, everyone does, if you do this of your own accord. Generally, holding anything to earnings is very risky, but my reasoning is simple. First of all, look at this trend line. Trend line going back to 2014, connected to this high. Look at it, exactly cuts through the high here, which is where I shorted this stock, and that's why I shorted this stock. In addition, you have a time factor here. Notice short term, which I think is very cool too. And yes, Facebook's up $1.30 today. Fair enough. That's a nice little move. But what I think is interesting is that off of this down move, off that trend line, you have a down move and then a 3 inside bar. 1, 2, 3 inside bar. 3 inside bars inside of a red candle is actually a bearish signal. So you have multiple bearish signals on Facebook going into earnings today. I don't think that there's a ton. I don't really foresee Facebook having a massive drop. So I don't think I would play it with options personally. I think upside risk is probably $5. If it goes up, it's not going to go up much more than $5. If it goes down, though, your target is pretty simple. There's a gap fill 20 MA on the daily chart right here, and that's around $99, give or take. So you have a downside of about $5 here to the downside short term, and maybe risk about $5. And I think if you play the options, you're paying a premium of almost that anyways, and those can expire worthless as opposed to a short on Facebook. It could come down the following days with the market coming down and so forth. All right, so that's what we're looking at here, guys. There's a couple other factors that we can go into. We can look at the weekly chart here as well. Take a look at the weekly on Facebook. There you have the weekly. Amazing move. I mean, if you look at Facebook long term, I mean, look at this. Broke out, and it's really never looked back ever since it broke out from this pivot high. Amazing run. Is Facebook a great company? Sure, it is, and it's going to make a crap load of money. Does it mean that the valuation up here is where it should be? That's my issue. Everyone's so bullish on Facebook. If you listen to the media, everyone's like, oh, this is the greatest thing. They're going to do so awesome. So to me, that prices in that earnings for the most part. It prices in great earnings. So any sort of stumble, any small metric of slowing growth, or maybe their user activity is not as high, anything like that, and you will see Facebook come in a little bit, and that's what I'm going to give a shot at. I think, again, you risk $5 on the upside on the stock to make potentially 5 or more on the downside. I'm going to take that risk here based on the upsloping trend line here. Interestingly enough, you could even kind of use this back sloping trend line as well. If I take this high here and connect it through that high as well, it kind of goes right through that same line. So pivot high to this pivot high here, same general vicinity. So there's a lot of resistance. You can see that every time you get up here, you get some sort of pullback or pause, and we'll watch and see how it plays out. So Facebook earnings after the close. Let's see what happens. Take care, guys.